Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know and nothing more regarding factors and developments that are likely to affect your investment portfolio. So, again today on Tuesday, May 27th, the S&P 500 made another new all-time high. And the Dow Jones Transportation Average also made another new all-time high today. And those are very significant developments, especially the all-time high in the Dow Transports. The reason being, the Dow Transports moving higher is indicative of what's going on in the manufacturing sector in the U.S. economy. And the reason being is that if transportation stocks are moving higher, and transportation stocks, by the way, or the Dow Jones Industrial Average, I should say, is composed largely of stocks of shipping companies. That is truckers, boating companies that move goods around the globe, and rail lines. And the fact that transportation average has continued to move higher and to make new all-time highs over the past few weeks indicates very strongly, or reveals, that there's more economic activity going on in the shipping sector and in the manufacturing sector of the economy. I mean, you know, goods that are shipped need to be manufactured. And that's very, very important, because the manufacturing sector, jobs in that sector tend to be relatively high paying. And therefore, with the transports moving higher, indicating that investors realize that shipping companies and manufacturing companies are economic activities picking up there, and that the employment situation, at least good jobs, the number of good jobs that will likely be created during the months ahead is likely going to continue to improve. So that's very, very positive developments. Now, in addition to the S&P 500 index and the Dow Transportation Average making new all-time highs, the NASDAQ Composite Index and the Small Cap Russell 2000 Index continue to rebound sharply again today. Been rebounding for about 5 or 6 days in a row now. Also very significant. I mean, my research indicates strongly that the big downturn in story stocks over the past few months, that is stocks of companies that have no earnings or likely to never make a profit, as well as companies that have made profits up to this point, but appear to be substantially overpriced. Those story stocks, you know, they were due for a big pullback. I mean, the levels at what those stocks were trading relative to the recent or historical earnings or the projected earnings over the next few years just made no sense whatsoever. But if we look at the trading action in financial markets, and primarily I'm speaking of the volume of trading in those types of stocks, those story stocks, as well as what individual investors have been doing recently and thinking recently, I'm thinking that the big downturn is a group in NASDAQ growth stocks, not story stocks necessarily, but you know, the NASDAQ, which is composed heavily of technology stocks and smaller cap growth stocks, you know, they tend to move in the same direction as these story stocks. And my thinking is that the downturn in those stocks has come to an end. And I say that because a lot of the trading action, price and volume statistics, price momentum statistics, statistics that reveal the thinking of individual stock market speculators and traders, just suggest that some selling pressures have now gone away. Secondly, my research indicates that many of those stocks are now priced at very reasonable levels in regard to where their earnings are likely headed over the next few years. And we continue to get readings on reliable leading economic indicators suggesting that the pace of economic growth here in the United States, as well as in many other regions of the world, is going to increase during the second half of this year. So we have a lot of positive developments going on. I mean, I'll just throw out one example. The durable goods orders, that is, orders from retailers and wholesalers, orders from those retailers and wholesalers from manufacturers of those goods, that is, household furniture and appliances, automobiles, consumer electronic devices, business office equipment. Those are durable goods. Orders for durable goods rose for the second month in a row last month. That was announced today by the U.S. Department of Commerce. And Wall Street economists, on average, were expecting durable goods to decline last month. Well, I'm not surprised at all. I told my business partner earlier today, I said, you know, it's interesting. The vast majority of these Wall Street analysts, I wouldn't hire. And the reason being is primarily they all think the same. And that's not surprising since they tend to come, a lot of them, from the same business schools. So they learn the same things. And, you know, a lot of what they learn is valuable. I mean, I've attended business school. I did not get a master's degree, never had a desire to get a master's degree. I've taken numerous courses, graduate courses, at very, very reputable business schools. And, you know, I learned a lot from those classes, so I'm not saying that all of the learning is bad, but those schools, they tend to teach people to just regurgitate information and not to think. And so, you know, these Wall Street the economists, I told my business partner today, I said, you know, I'm not surprised at all, because probably what they did, they looked at durable goods orders last month, that is the previous month, I should say, for the month of March, and durable goods orders were up sharply. And they said, okay, well, that probably means that durable goods orders are going to be down in April. The reason being is, generally speaking, orders for durable goods from wholesalers and retailers tend to be very volatile on a month-to-month basis. And whenever they're up substantially during any given month, they tend to then decline during the following month. And that's not surprising whatsoever. Now, Wall Street economists and analysts that I'm speaking of, most of those guys, what I'm going to tell you next, they can't figure this out because they're not trained to think outside of the box. But the reason that tends to be the case, that is the volatility, month-to-month volatility in durable goods orders, has to do with the fact that if you're a retailer of durable goods, well, once your stocks of those, your inventories, when I say stocks, not common stocks, your inventories of those goods, once they get lower and lower, but the demand for those goods from shoppers remains the same or increases, well, retailers will place some big orders to replenish their inventories. But they usually tend to think at least a couple months in advance. So when they place a big order, they don't tend to then place another big order the following month. But because the leading indicators that I monitor on a regular basis have suggested to me for the past couple months that we're going to see the U.S. economy continue to improve and the pace of economic growth pick up here and the employment situation improve and the housing market improve and the manufacturing sector improve, my thinking was, well, this month's going to be a little bit different. I think durable goods are going to be up again. And sure enough, they were up again during April. So that's a very, very positive development. And because individuals and businesses, they don't increase their purchases of durable goods unless they're feeling good about the future direction of the economy. The reason being quite simple. Is durable goods, that is household furniture, consumer electronic devices, automobiles, those tend to be big ticket items, expensive items. It's not the same as going out and buying a desk lamp or a notebook or or a piece of clothing. Those are expensive goods. So anyway, enough about that. Let's see. So what else is going on as far as today? Trading action, the financial markets, and economic statistics and geopolitical factors that were issued today or became known today. Well, even though the S&P 500 index has continued to make new highs, outflows. Let me back up. People, individuals that invest in stock mutual funds withdrew money from stock mutual funds in the aggregate for the third week in a row last week. Now let's put that aside for a moment. Secondly, the American Association of Individual Investors, which does a weekly survey on the thinking of individual investors, that is the optimism or pessimism of those investors, the bullishness or the bearishness of those investors, has shown that individual investors have became very bearish approximately 5 weeks ago and continued to be very bearish last week. So we've got individual investors withdrawing money from stock mutual funds for 3 weeks in a row, and individual investors in the aggregate are very bearish right now, yet stocks have continued to move higher. Stocks is measured by the S&P 500 index. Well, how could that be? How could that be? If these individuals are withdrawing money from stock mutual funds, are bearish or pessimistic about the future direction of stocks, but stocks are moving higher. What's that telling us? It's telling us that institutional investors are behind the advances in the S&P 500 index. That is what is generally referred to as smart money. Definitely investors who do a lot more research in general than individual investors. So that's very, very positive what's going on here. So I think I've said enough. Let's one other thing. I don't want to miss this. Geopolitical developments. I'm presuming most of you know, but you may not know, is that there were no major problems out of Ukraine yesterday regarding the election that was held there. No major problems, and this conflict between Russia and Ukraine tends to be going away, or at least I can't find the word I'm looking for, but the big conflict is deteriorating, and it seems to be becoming less of an issue. So that's also a positive development. So we've got a lot of positive things going on here. Now, for those of you that subscribe to one or more of our financial market newsletters, our model portfolios are continuing to do well too. As you know, those of you that have been with us for a while, I've stated this repeatedly, and I'll probably continue to state it from time to time. During 2013, in hindsight, unfortunately, I kept, through my advice, I kept our subscribers out of stocks for about 5 months during 2013, and we missed some big upward movements in stock prices, but I'm okay with that, and hopefully our subscribers, for the most part, are okay with that too, because those subscribers know that I truly look out for their interest, that I pay just as much attention on trying to avoid big downturns as I do in trying to make money for our subscribers. So I bring that up because I don't want those of you that are not subscribers to think that I'm just always rah-rah and I only say good things about myself. Our subscribers know that that's not true, that I'm the first to admit when I make mistakes, and I don't always get everything right. But right now, for those of you that are subscribers, I've told you in our past few weekly updates that my research indicates that economic conditions are going to continue to improve around the globe, and especially here in the United States, and that the pace of economic growth is likely to increase during the second half of this year. And in my opinion, stocks are therefore going to continue to move higher, and nothing has changed. And we had another good day today. You know, our model portfolios definitely have been performing well over the past few weeks. And in my opinion, they're going to continue to perform very well during the weeks and months ahead, at least through the remainder of this year. And that's because, you know, I think we're positioned in the right sectors of the market. That is, sectors of the market that tend to perform best during periods when the pace of economic growth improves. So, okay, enough about that. If you're a subscriber, you already know a lot of that because I've been telling you about it in our weekly updates. So I want to look real quickly here. Today's show has been longer than anticipated, but there's another quick note. Now, even though I'm very, very positive here on where stocks are headed over the next several months, price momentum statistics suggest that we're now in overbought territory on a very short-term basis regarding U.S. stock prices in general. So my thinking is, knowing how people tend to get all depressed at the same time and then very, very happy at the same time, my guess is that we'll see stocks continue to move higher, stocks in general, over the next couple of days. But excuse me, please. But then later this week, I'm thinking we're probably going to have a modest pullback. So, long video today, so I'm going to stop talking, and I'll talk with you again tomorrow.